Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
You're tuned into the humdingiest, yes, I'm going to patent that, I like a new word, humdingiest stock picking show on television, Share Shootout League, right here on CNBC Africa, first in business worldwide. I'm Bruce Whitfield. Now, why is the South African government considering, allegedly, reportedly, selling its stake in Vodacom to bail out the endless, bottomless money pit known as Eskom? Is the Gauteng ANC in the same lane as the e-toll opposition? And why single out the SABC board chairperson for a lack of qualifications when it's clearly becoming an SABC trend? Surely to becoming a senior executive or on the senior manager at the SABC, you need to have no qualifications. Isn't that the rule? We don't know the answers to any of these questions, but what we do know is that the league is coming to a close. Just take a look at what happened on the Twitter streets regarding the match between K-Live and Shootout. Now, K-Live stayed with the votes and he really got the help of his entire management firm, who took to Twitter and supported him. Just because he's got more friends, I suppose, Mr. Shootout. Sorry for you, the fat lady seems to be warming up her vocal cords. 3 points, not going to give any of the players sleepless nights, however, except the one, perhaps. The one is the bottom one, the bottom trough, the bottom feeder. He is at the bottom of the league. You decide who wins the match, you decide who will stay and who will go. You've got to vote using the hashtag. You decide who gets crowned the champion of the most ferocious stock picking show on television. What you have to do is follow at SSO League. You tweet any of the stock pickers hashtags, and it's as easy as becoming SABC chairperson, provided, of course, you don't have too many qualifications to your name. Now, back to the match at hand. Our first stock picker is still looking for the dummies guide to Twitter. Our second stock picker wears a lot of pink. He's sending his votes to tally to the CNBC auditors. I sense some trust issues. We'll give you the players.
Now Kgantsi, portfolio manager at Nedbank Private Wealth. We are a valuations-driven house that aims to create wealth for our clients on a need-based basis, especially those who take a 3 to 5 years view on the market. I will try to, show my knowledge of the markets, keep to speed, with companies and also with my competitors, and also try to make sure that I stack up to the competition. Christopher Gilmore from Absa Wealth. I think so, because I've been in the game for some time, and, my knowledge of the markets and companies is very sound. So I think that I stand a very good chance.
It's easy when you do it live because then you just keep flowing. My name's Lavan Gopaul. I'm the CIO with Trademark Futures. Because we're a futures trading house, a lot of it is trading single stock futures and the index. We try and be as swift as possible to get in and out of the market. So we look for gaps both up and down to take advantage of these moves for our clients. The game plan, it's a poker game, so you've got to keep a poker face, and we're going to be armed with all this knowledge and research, and we're going to be playing our strategy very close to our chest. So I think it's mainly a knowledge base more than anything. The biggest competitor's got to be Bruce Whitfield. He's always putting us on the spot and he steals all our limelight. I definitely think we've got a very good chance of winning the game. It's like playing poker. So we've got a very good knowledge of the market. We know all the stats and we know when to hold them and when to fold.
Is it Pinky in the brain or is Pinky the brain? Both Neo Kgantsi, the one from Nedbank Private Wealth, and Lavan Gopaul, the good guy and the independent guy, the guy with news to tell, he tells us, are both at the lower end of the league, and they in serious need of 3 points each to save face. They're not going to do anything else. But first, the house rules. Both of them have picked 3 shares. Only I know what they hold. Each player's got to accept at least one of the other players' picks. They've got 30 seconds to argue those picks, and players can choose from the JSE. We also give them an offshore allowance because we're generous that way. 1 international stock per round as well. Those are the rules, and if you're ready to rumble, Pinky, can I call you Pinky? You don't mind. It's not too personal, is it?
Pinky Punter.
Pinky Punter. Well, let's see if he's a good Pinky Punter or whether or not you'll steal his thunder. Okay, Lavan Gopaul from The Independent. So there we go, The Independent, Lavan Gopaul. Some habits are hard to break. The oil price is under enormous pressure. We've seen it come down. It's peaked at over $130 a barrel. Then it's sort of stabilized between 100 and 110. Recently, it's plummeted in the mid-80s and is showing further signs of weakness. Why then would you want to invest in BP? Tell me in 30 seconds.
So BP has gone through a number of challenges. The low oil prices hurt them considerably. They've had to overcome a number of lawsuits, and they've had a massive spill in the middle of the ocean. All of this has seen the share price tumble. They are widely held issue, very good dividend player, huge prospects for the future, and my view is bullish on energy.
There we go. But 6% dividend yield. In the UK, that must be close to record territory. Very few companies offer those kind of dividend yields, don't they?
So the high dividend yield comes about because the share price has tumbled in recent times, just in this last 6 weeks.
But that's the yield you would get if you bought the share at current levels. That's the yield you would get on your investment.
And if they were to continue paying dividends in the same fashion.
As we learned from African Bank, that doesn't always happen in perpetuity. But BP is by no means an African bank. Do you like BP enough now to buy the share?
I don't. You know, in the energy sector, maybe I would go with ExxonMobil, which is involved in offshore drilling, you know, in the Gulf of Mexico. Interesting projects, basically where I think that over the next few years, they would be making money because of growing volumes, you know, of petroleum products. Or else maybe I would go for Gazprom in, you know, Russia, where basically they are also involved in management of pipelines, storage of fuel, and so on. And there's been interesting projects, you know, and deals that they've closed very recently. So I doubt that
that's fine on a fundamental basis. But what Lavan is talking about here is a punt, an opportunity to capitalize on a share that it may or may not be being unfairly knocked down or wrongly knocked down.
Look, the whole sector has been beaten down, you know, but, you know, going forward, you know, the valuations are very mouth-watering, but I don't see them, you know, growing. How low does
oil go?
Sorry?
How low does oil go?
Look, Saudi Arabia, which is the biggest pumper, you know, says that they are comfortable with anything between $60 and $80 a barrel over the next 2 years. That's huge. And most of the players basically need, you know, to operate between 90 and 100, you know, just to break even.
Okay.
So
in that context then, Lavan Gopaul, how can you buy BP? Yes, the share price is down, but so is the oil price, and possibly further downside.
So firstly, I'm happy that he mentions Gazprom, which was a pick of mine just a few weeks ago, and the fact that he's mentioned Exxon and their exploration in the Gulf. As it happens, BP is very active in the Gulf, so much so that they spilt a lot of oil there. But the more important aspect is the energy price, which is the biggest reason that I'm choosing BP. So it's oversold and very dependent on energy prices.
Where do you put your petrol into your car? What garages do you stop
BP,
at?
of course.
Of course you do. And what about you there?
Oh, I like Shell.
In the area in which I live, the tattiest petrol stations are BP. I'm afraid
the Latin American players are now clamoring for emergency OPEC talks, and I think between the Argentinians and the Chileans, they're looking to push the oil price up. I don't buy into the Saudi story of being comfortable between 60 and 80.
Okay, so you're sticking with BP. Sure. It's good for you and me, but not good enough for you.
It's bad for me.
There we go. Shooting it down.
Shooting it down.
There we go. BP is shot down.
Completely.
Sorry about that, BP and obliterated.
Yeah.
And they've also got very expensive offices at the waterfront. They should spend less money on the corporate head office and more money on the petrol station.
And for the next decade, you know, the high growth areas will be in the Arctic as well as the Caspian Basin. And BP is nowhere near, you know.
There we go. You've made your point. You shut them down. Let it go. Move on to the next one. Global uncertainty usually, Kgantsi, means that the gold price becomes a bit more buoyant. And we've seen in recent times gold price beaten down. Suddenly, equity markets have gone into a serious sort of negative zone. Volatility has picked up. Uncertainty has picked up. That's usually good for the gold price. The gold price has recovered from its lows around $1,200 an ounce. And you want to short one of the most exciting gold plays in South Africa. Tell me why you hate Sibanye.
Simply because most of the good news have already been priced in. Remember that when they were carved out of a gold field, basically, you know, this share price, you know, has gone up by almost 115%. And during the same time, you know, you'll find that their production was up 65%, and then they cut costs by 12%, and their capex, they've been able to reduce it to about 8%, and the market liked that. The nice thing is that they are a model dividend player in the gold sector where you're getting a yield of around 6%. But they think that their next growth area is in platinum, and I don't see them repeating the successes that they have had in gold.
Why not?
Simply because, remember that they didn't have to pay for the gold assets. They were just, listed separately. Whereas if they buy Union Mines as well as Rustenburg Mines from Anglo Platinum, they will have to pay something like 13 billion rands. This is almost 65% of their market cap. And obviously, if you're going to spend that amount of money, it's putting your dividend at risk.
Okay. That's the good arguments being made there.
Can I go on?
You had your 30 seconds and another 15.
Okay.
But you're interesting, so carry on.
Look, and most of these gold assets that they got, were cash generative. Whereas if you go to platinum, these assets that are on sale basically are sipping lots of cash. Anglo hasn't invested in any meaningful capex projects on them for the past 5 years.
There we go. A short on Sibanye Gold is bold, considering that we could see lots of upside in the gold price. And these guys, as soon as the gold price goes up, they go ka-ching to the bottom line. Would you be bold enough to short Sibanye?
So I wouldn't be shorting Sibanye. I'm not that bullish on gold operators, but I'm not going to take that much risk and go short on them. I admit that I think the stock is very sensitive to commodity prices. I'm happy that they've been innovative in their cost-cutting exercises and meaningful investments in sewing together a chunk of 3 different assets for the large part, and their investment within other minerals, platinum in particular, may be a fire sale purchase. They may be getting in at the bottom of the market.
And that's one reason to potentially like them.
For me, I think it's turned out to be something of a darling of the markets. Patriotic investors climbed in the moment they split the South African assets.
But there was all that rubbish that was around Orkney and Klerksdorp. I know this is your home turf, okay, so forgive me. But it was all those little gold mines that were sprung up 5 or 6 years ago, maybe to a pre-financial crisis time. And people were going, oh yeah, no, these are local gold mines. These guys are going to make the money. And they've all gone to the wall, haven't they?
Well, they've got 3 main assets, and they've been able to sew them together quite nicely, deliver profits. Bear in mind, during a period of strike action, Sibanye Gold has produced enough ore out of the ground, delivered a profit, and have beat the majors.
You sound like you do like it, but you don't like it enough to buy it, but you certainly don't dislike it enough to short it.
As I see a little bit of an uptick on the metal price, I'll be buying Sibanye Gold, but I won't be shorting it.
Absolutely not. So you shut down on your short, I'm afraid, regardless of whatever it is you want to say about it now, Kgantsi. Let's move on then to Lavan Gopaul, the Independent. This is such an interesting one because everybody believes that the super rich are super bulletproof. Global wealth. There's a Credit Suisse wealth report last week showed that wealth has never been as much. $267 trillion of wealth in the world, up 8% from last year. That was before the market correction of recent weeks, of course. But still, the world is super rich. We're way above 2008 levels. Richemont share price is pricing in negativity. You like it enough to want to buy it. In 30 seconds, tell me why.
I believe luxury goods is demand inelastic, and you're seeing a number of new wealth players being created in Asia, in Russia, in the Middle East. All of these players, particularly the Chinese players, are big demanders of luxury goods. The biggest sales that Richemont experience is in China. And even with something of a slowdown in China overall growth, demand for luxury goods continues. The sales that they've seen is flat, and maybe that's because they've had a few very bullish years, strong brands, strong purchase.
Something like 10% of the world's super rich live in China, and that number is growing exponentially. There's a lot to like about Richemont, but there's some risk now that I believe a lot of people are ignoring, and that is they assume the super rich are price inelastic, I think
Correct.
you called it, that they're invulnerable to high prices.
Look, I think that, there can be some level of elasticity, but generally I agree with his reasoning. The pool is growing. Because remember that not so long ago, their bread and butter market basically was Europe as well as North America. But things have changed, over the last decade. They are more into, they're making a lot of business in Asia, in Russia and so on. And if you look at Forbes, list of top, 100 people, then suddenly you see that the number of emerging market dollar billionaires and millionaires is growing, and I think that, based on that, at the current valuations, Richemont is priced, for Armageddon scenario.
What about, no, it's not priced for Armageddon, it's priced for a little bit of negativity.
It's coming from about 115. rents a share. It's
below
now
90.
It's close to 80 something, you know. So, and I think that there is room, you know, for more downside in the short term.
How much money does Richemont make out of the nouveau riche? The people who want to be seen to have people think that they're wealthy, so they go and buy the cheapest Mont Blanc pen, but it's a Mont Blanc pen.
Well, the company's value sits somewhere around 750 billion rand. And that is just the sale of perfumes, cigarette cases and pens.
You wear some of those, don't you?
So
what Cliff and Alpos that you're wearing?
What I'd like to say is the Gini coefficient that exists in India, China, Russia, and the Middle East, South Africa as well, means that there's such a high demand for those products that they will continue. So it's a question of rich boys buying smart toys.
There we go. He likes it, Richemont, and you'll accept it now.
Yeah, I'll accept
there we go. Takes Richemont with both hands. He'll take some of their product as well if you've got any. There we go. Kgantsi from Nedbank Private Wealth, your second pick this evening. You're a big fan of that nice Mr. Brian Joffe. His company has come under a bit of pressure recently. We saw the share price spike up following the news that they're examining the possibility of a secondary listing for the Bidvest food services business outside of South Africa. Things got a bit quiet on that particular front and the share price has pulled back. In 30 seconds, tell me why you like Bidvest.
That particular point, I think that is what will unleash value, you know, going forward. Because I mean, if food business is listed separately in London, I think that the ramp of the business, you know, in other parts of the world will be very lean. So it means that going forward, Bidvest will not need, you know, the likes of, ad hoc size of acquisition to be able to tick the clock in the overall business. I think that this is also, you know, a good strategy for, you know, preparing for the, you know,
Finish the thought.
Okay, Mr. Joffe should be retiring anytime soon. And
that's what people said for the last 5 years.
Oh, of course, you know, but I think he just needed something big, you know, to be able to...
He needs a nice big swan song.
Of course.
Bidvest, there's so much to like about Bidvest. It is fundamental in industrial South Africa. You can't go to a public bathroom anywhere without wiping your hands on a Bidvest towel.
Or your backside.
Speak for yourself. Brian Joffe does what? Okay, so do we like Bidvest? Do we like Bidvest enough?
I'm bullish on Bidvest. I think that they have sufficient reach, not only in South Africa, but globally. They have a number of strong brands. They are visible in a variety of different sectors. The succession model with Bidvest, I think, has been well thought out. So when Mr. Joffe decides to resign, I think he'll have retire. I think we'll have that chair being filled with experienced people. But most of all, I like Bidvest because they buy good companies at very attractive valuations.
And milk them.
And they've done it successfully for the last 30 odd years. So yes, I'm bullish on Bidvest.
You'll take Bidvest?
I'll take it.
There we go, he'll take Bidvest. Who will succeed and who will be left with a nosebleed? Who will for mercy be pleading? Boy, that's a lousy poem. But hey, we'll take a quick break. We'll see you after these. Let me just remind you before we go as to what has happened so far. Lavan Gopaul, the Independent, has gone for BP and Richemont. BP shot down. Now prefers Gazprom. He'd rather deal with the Russians than the Poms. And then Richemont, enough rich people, of course, in the world to satisfy the desire for expensive perfumes, leather goods, watches and pens. So that one's been accepted. And then Kgantsi from Sibanye Gold going short. He's a lot gutsier than Lavan Gopaul is. Lavan Gopaul will buy it if the gold price keeps going up. He certainly won't be shorting it. And as far as Bidvest is concerned, then Lavan Gopaul supports the purchase of Bidvest. It's got interesting global opportunities opening up for it. This is CNBC Africa. You're watching Share Shootout League, the only league in the world without any training grounds and no rematches. This is match day number 26 and we're getting closer and closer to the final four. Only your votes can change the look of the league. What you have to do is follow at SSO League and you vote for either the one who is go on your knees and beg for votes. No, don't do that. That would be humiliating, but he's doing it figuratively. And the good guy He would also like a couple of votes, and he probably would go on his knees if we asked him to, but we're not going to. So we really need your votes for these guys to just restore a bit of dignity. They're not going to win the series, not at all. Let's have a look at the shares quickly this evening. Lavan Gopaul from The Independent with BP and Richemont. Richemont accepted, BP shot down, and now Kgantsi from Nedbank Private Wealth. He's short on Sibanye, taken down, and Bidvest accepted. So let's go to your final two stock picks of the evening. Gentlemen, now Kgantsi, you go first with an unusual and terribly courageous pick. Build on the thought of Wilson Bailey Homes in 30 seconds.
Look, their order book has increased by 65%, over the last 12 months. And, they've focused the attention of the business away from loss-making businesses, especially in mining and so on, into Australia, where basically they're involved in building, residential apartments, and also, in some retail-focused, shopping centers here in Gauteng, KwaZulu-Natal, as well as Western Cape. I believe that, this share price, the earnings will increase progressively by 13% per annum, and it's giving you a dividend cover of 2.
There's a lot to like, but the construction sector is just so blimmin' unsexy. But maybe that's the point, Lavan. You've got to go unsexy to make money in volatile markets.
I think that the construction sector being cyclical, being hit by so many fines, means that opportunity will exist in time to come. And you want to see something of a lift in terms of these shares, something of a turnaround before you start buying. I don't think the time is ripe just yet. There are other sectors, particularly with our market being hit down as badly as it has been, there are other sectors that offer better value. The construction sector, even with large order books, have seen margins being squeezed, and I'm not altogether convinced that now's the time. It's unfortunate.
The order book is one part of it, isn't it? But if you're doing work at a 5% margin and suddenly you're doing it at 4 or 3%, whatever the margins are in construction at the moment, suddenly you're not making as much money and you're doing just as much work. That's not efficient.
Look, I mean, pre-2010, margins were unsustainable. In some projects we had margins of about 17 to 20%, but everyone was banking for a correction, and basically the margins have stabilized now, especially in earthworks, where you get margins of around 30%.
Is there enough work going on to sustain these?
Exactly. Remember that they are looking beyond South Africa. Yeah. I mean, this business is into Ghana, into Zambia, into Australia, and growing into the Middle East. So basically, you've got geographically a good spread,
A strong and inspiring pitch, but is it good enough for Pinky?
So let me say that in the super sector, building and construction and property, what we found is investors are drawn to property stocks with fairly decent yields in South Africa. Yeah. The global yields offer more attraction. Construction have too many moving parts, and that affects margins. And so you get a few one-day wonders. We've seen Sen's announcements of good earnings, but that's off a low base. So unfortunately, I'm shooting it down. Bang.
Again. Jeez, no, you're not having much luck this evening with your...
I've got 9 lives, so you shut me down. I'm left with 7 now.
I think during the series, I think you used them all. Okay, Lavan Gopaul, The Independent. I'm interested in your final pick. It's a perennial favorite. Yeah. You have to, in the next 30 seconds, tell me something I've never heard about this company, because I've heard it all before.
Okay.
So BHP Billiton in 30 seconds.
So yes, global giant. Yes, country mix, currency mix. You've also got a huge contract of 24 billion rands worth of coal to the South African government. You've got potential that some of its assets will be separately listed, as well as the fact that they're looking to score quite big on the iron ore sector, investing quite heavily on some of their peers, Anglo PLC in particular, looking to possibly divest in some of their businesses.
Okay.
Billiton will pick up the
very
pieces.
Very nice, nicely packaged, nothing new though. But look, I mean, but the point is, BHP Billiton is a perennial favorite because people like what it does, they like the structure, they like the way in which it works. It's hard to shoot down BHP Billiton now. I challenge you to have your best shot.
Okay, look, if you have it, don't sell, but if you are like me, I think wait for it until it gets cheaper, because I mean, if you look at the assets, iron ore is under pressure at the moment. Mm-hmm. The best iron ore that you can get in the market is with Rio Tinto, and iron ore price basically is falling. And then you look at coal. Thermal coal is under pressure. The only place where you can make a bit of money is in metallurgical coal, but China basically, is a market maker, because they take 50% of the world's production. So basically you are at the mercy, of the Chinese there. And I don't see, much growth going into the future. And then you look at energy, 40% of their earnings are coming from energy. And energy basically is in a free fall, as we speak. So I can be able to pick a BHP Billiton cheaper, in 3 months' time. In 3 months' time, I will be in your camp. But for now, can you just have 2 shots?
Boom, boom. So mid-January, you believe BHP Billiton will be cheaper than it is now?
Look, it's because, everyone was banking on a correction, and we knew that it will come at some point, But in investment, you have to know when to shift the gear, You don't have to be, religiously attached to the stocks, because you can like the company, but it will never like you in turn.
There we go. That was good. That was good. You've been shot down on that one, I'm afraid.
So let me say,
last 30 seconds.
Commodity prices seem to lift as equity markets and growth globally lifts. We've seen these markets being bashed and battered in the last few weeks. Possibly this is the time to pick up good stocks like Billiton, accumulate them. Yes, maybe you'll get it cheaper in time.
Big, bold and brave. Take this fight outside.
I don't agree.
Take this fight to behind the bicycle shed.
In 15 seconds. I don't agree with him. Over the last 4 years, resources have consistently underperformed equity markets anywhere around the world.
The one needs to move up from the bottom of the league. Yeah, and certainly Lavan Gopaul also needs your help. So, Nedbank, you need to get all the staff at head office cheering your own Nedbank. There'll be a tweet or a retweet. Well counted. Voting closes Sunday midnight, of course. And then Lavan Gopaul, he's independent, so he's going to be buying cell phones and cell phone contracts and tweeting himself, I suspect. But anyway, do vote for whoever you think has given the best show for us this evening. You follow at SSO League. You use the power of the hashtag. We'll be back on Tuesday, match day 27, right here on CNBC Africa at 8:30 till next week. Stay cunning, and I've got to separate these two.